sticker packet, the new packet. First, so just a little bit about our audit. Our firm works for the City Council. You'll notice when we cover our audit opinions are addressed to the City Council. Our job is to audit management. Your management gives us the financial statements or the general ledger to audit. We give an opinion over the fair presentation of the financial statements. Once again, we work for you, audit management, and give an opinion on the fair presentation, management's fair presentation of the financial statements. We technically do 3 audits for you. We do a financial statement audit. We also perform a federal single audit and a state single audit. And the reason for the second 2, the federal and state single audits, is because you expend over $750,000 of federal and state money. So in the compliance reports is where we give our opinions over federal and state compliance. But overall, we gave you 3 clean opinions, 3 unmodified opinions of an opinion over, clean opinion over the financial statements, clean opinion over federal compliance, and clean opinion over state compliance. As part of our audit, there's multiple different phases, but one of the first things we do is test the internal controls you have in place. We take a random sample of your cash disbursement system. We test the internal controls over payroll. And we also look at all of your material transactions. You have multiple different opinion units, and I'll cover those as we get into the financial statements. And based on the activity in each of those opinion units, we set a materiality. That's a calculation that we do. And so for each of your opinion units, we look at all material transactions, because when we give our opinion, we say the financial statements are materially correct, which means we don't audit every single transaction. Once again, we take a sample when we look at your internal controls, and then we look at material transactions to make sure that they're correctly stated as to amount, and the correct amount is recorded, timing, make sure they're in the correct period, and code and correct fund. So by testing the internal controls over cash disbursements, payroll, and material transactions, material expenditure transactions, that allows us to place reliance. If we find no errors in that sample, allows us to place reliance on those controls. And by looking at those systems, cash disbursements, payroll, we cover the expenditure side of your profit and loss. We also test internal controls over cash receipts, utility billings, and harbor billings. And once again, that is the revenue portion of your profit and loss statement. We also look at all material journal entries that are posted by opinion unit as well, just to make sure that, because there's, we see it from time to time where you correctly code a cash disbursement, for example, and then someone comes in and has the ability to move it through a journal entry. So we just want to make sure that if we're testing the end, we also want to make sure that it's not being moved out on the back end. So throughout all of our testing, all of your systems, we found 0 errors except for, as you can all guess, probably the utility billing system, which no one's surprised. We took a random sample of 40. We also pulled 7 transactions from, that we'd noticed errors in 2021 during our 21 audit. We pulled 7, and I've got a listing of those, and we can cover those if you want, just to see if there had been any remedy to any of the problems we've noted before. Of the 7 we looked at, 2 had been adjusted and corrected, UAF and Highliner. Oh, I'm sorry, 3 of the 7 had been corrected. So problems we noted in UAF, Highliner, and Icicle Seafoods had been corrected. 4 other transactions or entities that we'd noted errors in the prior year 21 were repeated or similar errors in 2022. In talking to Sully, it sounds like you guys have outsourced that portion of operations starting in May. But as we discussed during the audit, you still have January, February, March, April in-house. Once again, when we come back for the next audit, we'll take a sample of the whole population. More than likely, we might find errors again. But, we'll cross that bridge when we get there. But once again, we always talk about, or, when we have a finding, we always look at, we have to, perform extra procedures the next year, and we have to give, a response, is the finding corrected or is it repeated? So once again, I would just assume, this is our 4th year doing the audit. Every year we've had the same finding, or like I said, it's no secret to anyone. So that finding possibly or probably will be repeated again in your 23 audit. And I should have started by saying, if there's any questions at any point in time, please ask. This is, I'm here, I work for you essentially, and I'm here to give you as much information as I can, or as much information as you want. So you're not going to hurt my feelings if you jump in at any point in time with questions. So like I said, of our testing, so all the systems that I've talked about testing, we take a random sample of 40 transactions. If we find 0 errors in our sample of 40, it gives us about a 90 to 92% confidence that the rest of the transactions in the population are going to be correct. So no, once again, not absolute assurance by any stretch of the imagination, but high enough confidence for us to once again place reliance on those controls, which reduces the amount of work we do over those systems later on in our audit. If we were to find errors in utility billings, we would perform additional procedures to make sure that revenue is materially correct. So we can give an opinion on that opinion unit. As I said, we also do federal compliance. We tested 2 major programs for federal. It was the North Harbor Boat Launch Project and the Lowell Point Road. And so when you get that money, there's some strings attached, allowable costs, reporting, things like that we have to look at. During federal compliance, we found no errors or no improprieties, so nothing that would rise, or no problems essentially with those. And then for state, we looked at the dock replacement money you received from the state, and same thing, no errors in compliance. So it's kind of the only finding we had, and go into a little more details over the utility billing system. I do want to point out up front, this is, once again, this is our 4th year. I'm pretty sure it's our 4th year, but best prep, the best prepared the city has been, the finance department has been since we've been doing the audit. So I do want to, point out Suli and her team, and also, to my cap to you guys. I know that, you guys are approving the budget. I know that the audit prep and the, the year-round accounting assistance you're getting, I know it's not cheap. I don't know the exact number, but I know you spend a significant amount of money on that. It shows in your audit. I think the first year we had 3 or 4 findings. Each year that's kind of gone down. The amount of journal entries that we've proposed each year has gone down. This year I think we proposed 5 journal entries or material journal entries, as opposed to, I think first years we were proposing 20 plus. Each of the first years, once again, when it's not prepared as well, we spend additional time outside of the scope of the audit, which causes extra fees. This year I was just telling Suli there's not going to be any additional fees related to work that we had to do outside of our primary scope of the engagement. So once again, I do appreciate the city being willing to spend your money on outside assistance and audit prep, and once again Suli and her team have done a good job to help get the audit prepared. So makes our job easier, allows us to get in, out quicker, helps keep our fees low. Okay, so now we can get into the financial statements. And I also should point out, this is titled Annual Comprehensive Financial Report. You guys did receive the Certificate of Excellence in Financial Reporting again. There was a couple of years where you guys didn't get the certificate, which is on page BI 6 in Roman numerals. And essentially, it's kind of kudos for putting out an ACFR, as we'll call it. I think there's only less than 40 given in the state, and essentially it's just it's excellence in financial reporting. Not every entity can get one, or they have to go through some extra steps to get it. You have to put together a transmittal letter and a statistical section, prepare an MD&A. It's submitted to GFOA, which is the Government Finance Officers Association. They essentially grade your financial statements to make sure that they meet the standards, and then you get the Certificate of Excellence. So once again, it's good to have that, or kind of a kudos to the finance department for putting that, or getting that, because there's a few years where you didn't get it.
Let me ask you a quick question, since you said we could interrupt.
Yes.
Thank you.
Yes.
Before we get too far into the financials, you said that as far as electric utility billing goes, and I believe I just read in there that there were the same businesses had been billed incorrectly, and they're still being billed incorrectly. Did I read that right?
I did say that. Yes. Yes. So I've got a list, and I wouldn't say billed it. Not meeting the requirements you have set forth in utility, and I don't want to say they're overly cumbersome, but the regulations you have related to the billing system is very complex, and it's so complex that I try to bring the same auditor back year to year if I can, just so we don't have to start from scratch. This year, I had to bring a new auditor to test that system, and she spent at least a day just reading through, sitting with the utility billing person to understand it. We had a pretty good write-up. But same thing, we had some place to start. Here's the businesses that we had found errors in the prior year, so we pulled those again.
And we're still receiving those same errors with those same businesses.
Yeah, for example, not to call anyone out, but for example, St. Pete's Episcopal Church is set up as residential, which it doesn't meet the definition under your chart. City buildings, so you have a note that, so it says 2 charges for both water and sewer. The tariff specifies that if there are 2 entities, they need to be billed separately. So it says the city is double charged for water and sewer, but we're told this was due to the city having multiple buildings. When we reviewed the city shop, we found the duplicate charges for water and sewer, i.e. 2 charges for water and 2 for sewer, even though they're just charging 1 particular building, and then there's additional buildings for others. Mama Love Inc. So we found that there wasn't a meter in prior years, that a meter hadn't been installed, but the cost of water and sewer is at the base rate, and there was no additional amount for usage, even though they're on a meter, so they probably should have been charged additional rate.
What was that business?
Mama Love Inc. UAF, as I said, was corrected, whatever the deficiency was. And same thing, I can give you this note.
Well, I honestly asked, I know that we all have it right here, but for folks that don't have it.
Well, I don't know if you have this piece of paper.
I don't,
Sorry.
okay. I understand.
And I can provide that if you want,
Wonderful,
for
thank
sure.
you. Yeah, that'd be great.
And then Icicle was one question. Icicle is being charged 6 ERUs for sewer instead of being metered. The tariff specifies that industrial is to be charged metered services and ERUs for residential, small general, and large general. They're also not being charged a base fee for water. And once again, we're not looking at every single bill. We say, of these 7 that we looked at, we just picked a month and looked at it. We didn't pull, 7 times. So we didn't pull, 84 transactions. We just pulled one just to see if it had been corrected at that point in time of the random month we picked. So.
Thank you.
Yep. Good question. And did that answer?
It answered it perfectly.
Okay.
Thank you.
Perfect, yep. Once again, I think you guys know that it's complex, or there's a lot to it, and I think that's probably why I know the sale is pending or possibly pending or went out for vote, and then obviously outsourcing as well. So hopefully you can get it streamlined.
Someday.
Someday, yes. Because it's like I said, it's been an issue for a number of years. So. Okay. So once again, just showing or pointing out to you guys that you get this certificate of excellence again, which is you guys had it for a number of years. There was a break for a few years, and you have it back again. So I'm going to start with page 1, which is the second tab, financial statements. This is the independent auditor's report, as I said. It's addressed to the mayor and the city council. I'm not going to read it verbatim, but just a few things to point out. It says in the very first paragraph of the opinion, we've audited the financial statements of the governmental activities, which is essentially the general fund, all your special revenue funds, capital project funds, the business type activities, which would be your enterprise funds, each major fund, and the aggregate remaining fund information of the city as of December 31st, 2022. Second paragraph, in our opinion, based on our audit and the report of other auditors, and one thing I would point out there is Providence, the hospital, the activity of the hospital is included in the Healthcare Enterprise Fund. We rely on KPMG, their auditor, to provide the financial statements. We take that financial data, consolidate it with your financial data for that fund, and give a total. We take out any eliminations, money you transfer them. You're recording it as expense or recording it as revenue. We net those when we consolidate those financial statements. And give a total number. So in our opinion, based on our audit and the report of other auditors, the financial statements referred to above present fairly in all material respects the respective financial position of the city. So once again, unmodified opinion, and that just means there was no modifications to our opinion. And the same opinion we've given you each of the 4 years. And then third paragraph, we did not audit the financial statements of Providence Stewart Medical Center, and it gives you some totals, which, shows how big it is essentially in relation to the healthcare fund itself and of the business type activities, the enterprise funds in total. Top of page 2, one thing to point out, emphasis of matter, change in accounting principle. And I should point out once again, it's almost 9/30 to September 30th. We're talking about 12/31/2022. So some of this information, obviously it's relevant, but it's also 9 months. You're 3/4 of the way through 2023. It's one thing that just I want to point that out. But as of 12/31/2022, the city was required to implement GASB, Governmental Accounting Standards Board Statement number 87, which has to do with leases. There's some large adjustments or some large new balances you'll see in the financial statements in the enterprise funds related to assets that you own and lease out. And so with that, we have to record a lease receivable in the financial statements, and we're talking about some big numbers, I think over $5 million worth of lease receivables, and then an associated deferred inflow, which shows up down in the liabilities. And it's not a liability per se, when we say deferred inflow, it's inflows, money coming in that you won't receive until future years. So you have an asset and a deferred inflow, and then each year that's amortized and the lease will go down. The deferred inflow goes down as well, and you recognize the lease revenue. So it adds a little bit of complexity to your finance statements. There's some changes on the balance sheet, because once again, in a vacuum, if you just looked at 21 to 22 with no other changes, you'd have nearly a $5 or nearly $6 million increase in receivables and inflows just due to the new implementation of this standard. So that way, if any of your constituents, and I know there's a few that have questions, that's why there's once again in a vacuum a large new number on your balance sheet. Once again, Suli and her team spent the time to help implement that standard. We gave them a lease calculator, a spreadsheet, and they took the time to pull together all your material leases and put that information together for us. So we appreciate that. The opinion's 4 pages long. I'm not going to bore you with all the writing. But once again, the main thing is unmodified opinion. Starting on page 5 is the management discussion and analysis. If you ever have questions from your constituents or questions yourself, I always like to point people to the MD&A. It essentially takes the financial data, about 80 pages worth of financial data, and sums it up in kind of word form, and talks about the changes, assets exceed liabilities, which is net position, talks about changes up or down between years, talks about budget to actual changes, original to final budget, any changes there, and budget to actual variances. So it's pretty handy, and once again, management, as part of the act for application to get the certificate of excellence, they have to put together the MD&A. So we provide, the financial statements to Suli, her and her team put together the MD&A. Gives us some comparison. Nowhere else in the financial statements do you have a current year and prior year analysis, but in the MD&A it shows the statement of net position, current year and prior year, as well as the statement of activity. So I'll jump to page 17, which is the statement of net position. It's 2 pages. Assets and deferred outflows on page 17, liability, deferred inflows, and net position on page 18. And what this is essentially the balance sheet of the city as a whole. Includes all your current and long-term activities. So it's the government-wide financial statements. When we get into the fund financial statements, specifically the general fund, your special revenue funds, and capital projects, the fund financial statements focus on the near-term financial statements, essentially everything a year and less. So that doesn't include, fund financial statements don't include your long-term activities, which is capital assets, debt, pension and OPEB, assets and liabilities, where this statement here on 17 and 18, citywide, and includes all your assets and liabilities, current and long-term. So as of 12/31/2022, cash and investments of $55.1 million. Lots of big numbers here, but essentially total assets and deferred outflows, $283 million. And once again, if you have questions on any of these numbers, once again, I don't drill too much into the government-wide. When we get into the fund finance statements, we'll talk about a little bit more specific changes. Total liabilities is $62 million. And total net position, bottom right corner, second number up, of $213 million. 159 of that is your net investment in capital assets, essentially your capital assets minus any debt used to acquire those assets. You have restricted net position of $2.2 million, which is set aside for CPV, commercial passenger vessel tax. It's restricted by the state, and that's your unspent portion of those funds. And then you have unrestricted net position of $52 million, with $41 million of that coming from business type activities and $11 million coming from the governmental activities. Page 19, the statement of activities, essentially your profit and loss statement, once again of the city as a whole. How the numbers to focus on would be the third from the bottom right corner, change in net position. For the governmental activities, you had an increase of $581,000. For the governmental activities, business type activities, an increase of 7.1 for a total increase between years of $7.6 million. Once again, this includes depreciation expenses in this number. Capital outlay, any money spent on buildings or equipment has been taken out, capitalized. So in the fund financial statements, there's an expense, an expenditure. When we come to the government-wide, that is capitalized like a business essentially and put on the balance sheet. And then also changes in the PERS liability would be run through here as well. So on page 20, the governmental funds balance sheet, once again, this is just focusing on the near-term assets, assets and liabilities less than a year. General fund is always reported as a major fund, and then all of your other funds, special revenue funds and capital project funds, are reported in the non-major fund column. So your total cash and investments, $15 million, that's up $1.1 million from the prior year. So total assets of $20.2 million, total liabilities of $5.1. So a quick ratio, assets divided by liabilities of nearly 4. Fund balances, you've got in your governmental funds $14.5 million of fund balance. Unassigned fund balance, you have non-spendable, which is prepaid. Committed, for working capital and line of credit of $2 million. You've got assigned fund balance for insurance, capital projects, and public works. And then you have unassigned across the governmental funds of $7.9, almost $8 million. There's a loss or a negative assigned fund balance of $800,000 in non-major funds, and we can tell you those funds here shortly. But in the general fund, you have $8.7 million of unassigned fund balance, and that represents 50% of current year expenses and transfers out in the general fund, and it'd be 60% of just current year operating expenses, so not including transfers. So, yes, sir.
Couple questions. One, on that note, is that a healthy position to be in for a city?
Yes.
Generally 50% or so.
Yeah, I think your code, wants 3 to 6 months. And Julie, correct me, right? So it's, yeah.
3 to 6 months.
3 to 6 months. It's down a little bit from last year, and it's in the transmittal letter. I could go pull that up. Sorry, I didn't highlight it because we don't give an opinion on the transmittal letter, so I read it when Julie read it, or presented it to us, and I haven't followed back up. But I know it's down from last year. I think it was probably 55% last year, so a little over 6 months. It's down a little bit this year, but still, it's definitely within your
range.
Code. Like I said, code is 3 to 6 months. So.
Okay, and then the second question is liabilities versus assets. So it's a 4-to-1 ratio or so.
Roughly.
Is there a general rule of thumb on that, or do you not want to have? You don't want to have too many assets. I mean, you want to be using your money effectively, right?
Well, it's tough. So, it's tough, right? Because say you have a construction project, if the work is done pre-12/31, then, even though they don't bill you until March, it still has to be recorded as accounts payable. But if they push off the project for whatever reason, don't start it in February, and you don't have a liability, so there's not a perfect answer. Obviously, the bigger the number, the better. Because even if you took cash and it's sitting in your general checking account earning 1% or less than 1%, or you invested in a CD and earned 5%, it's still going to show up in here as an asset. So it comes down to how are you using your money. It's hard to know how you're using your money, in that sense.
In terms of the government, though,
Your task is to, say, build infrastructure, and if you're holding on your cash and not building infrastructure, that may be
Sure.
less of a positive.
Sure.
position.
Or you're saving, for a rainy day fund, or hey, we need a new fire department, so we're holding, we're building 3 years, or it's
Yeah.
gonna take us 3 years to get to that point. So,
Okay.
so I can't give you an answer on what's a good number, because you have a fair point.
At least we're-
Because you can argue either way, right? 1-to-1 could be great if you just got done building the fire department, or could be shooting for 6-to-1 because you're trying to build that fire department next year or the year after. So.
Okay.
So I don't mean to dodge the question,
No, no.
but it's all kind of comes down to what you guys want.
Yeah.
And you'll laugh, lots of my clients laugh. When we're auditing, I couldn't tell you the first thing if you're making money, if you have a net income or a net loss, because we audit cash, and then we audit accounts receivable, and we audit accounts payable, make sure they're correct. And same thing when we look at revenue, we make sure that this balance is correct, tax revenue is correct, and that payroll is correct. And then when we write the financial statement, sure, we can look at it and see, but we rarely look at it to see, because once again, to us, it doesn't matter if you're making money or losing money, because it's the policymaker's decision, right? Same thing, you might want to make $1 million for 3 years so you can build the fire department, or you might, because then when you build it, you're going to lose the 3 million, so we don't ever look at, in that sense, because there's so much that goes into behind the scenes that we don't ever see. So, but good question. So once again, 50%, your unassigned fund balance in the general fund, 50% of current year expenses and transfers out, which is good. We audit a number of larger cities, and yeah, I would say that's good. And it's definitely, times are tight for sure. Right now, we're auditing a lot of school districts, and I know that has nothing to do with the city, but, all of our school districts, we're auditing a lot of school districts. We're auditing, I think 40 out of the 50 school districts in the state. And I just met with a client that lost $1.6 million, and another one that lost $1 million. So, I've audited 4 schools, or I've done the audit work for 4 schools, and half of them have lost over $1 million, so just the ones I've looked at. So, times are definitely tough, and so having 6 months worth of reserves, I'd say, is definitely good and prudent for sure. So on page 21, just, I'm not going to touch on it too much, but it just shows these are your long-term assets and liabilities and how we go from fund balance to net position for the governmental activities. So you've got 52 million of capital assets for governmental activities. This is on page 21. 2.8 million of OPEB assets. You've got a bunch of debt, $12 million of long-term liabilities, so 4.4 of general obligation bonds, and your collective portion of the net pension liability of $7 million. So that's how you go from fund balance in the fund financial statements to net position in the statement of net position, the first statement we looked at. The next page, page 22. Statement of revenues, expenses, and changes in fund balance, essentially the profit and loss of the general fund and all your other funds in the aggregate. Third line up from the bottom, change in fund balance, essentially net income in the general fund of $600,000, a loss in your other governmental funds, your non-major funds of $285,000. Total net income per se is $332,000. So the general fund was down $442,000 in the current, or in 22. The non-major funds were down $1.5 million, and in total, across all your funds, we were down $2.2 million in change in fund balance. So last, in 2021, you had a net income or, net increase in fund balance of $2.57 million. This year it's $332,000. Page 24 is the balance sheet of your proprietary funds, and I shouldn't skip, I don't mean to gloss over pages. Page 23 is how you go from the profit and loss of the governmental funds to the statement of activities government-wide. So, as I said, depreciation expense, change in the net pension liability, principal payments on your debt, things like that. So, once again, I'm happy to go over any of these numbers at the end if you want or any time during this. Jumping ahead to page 24, the balance sheet of your enterprise funds. You have 4 major enterprise funds. once again, when I say major, there's a calculation that we do when we write the financial statements, and if any fund meets the classification as a formula we do, it's presented as major, and then your three non-major funds, I think it's parking, water, and wastewater, are rolled together in the non-major enterprise fund, and then you get a total enterprise fund, and then you have your two internal service funds. And so I would point out, under accounts receivable, there's a lease accounts receivable totals $5.833 million. Once again, that's the implementation of GASB 87. So you've got a lease asset of 5.8 and a deferred inflow on page 25 of $5.7 million. So unrestricted net position. This is be the third line up on page 25. So unrestricted net position in electric's 9.4 million, Harbor 700,000, SMIC 200,000 of unrestricted net position, healthcare facilities 18.3 million, and then your non-major funds have unrestricted net position of 9.1 million. So total 87 or 37.8 unrestricted net position in your enterprise funds. Page 26, the P&L for your enterprise funds. Once again, change in net position across them, third line up. Electric, a loss of $850,000, which is $100,000 better from the prior year. Harbor, an increase of $4.2 million, which is 4.3 better than the prior year. Most of that is from capital contributions, just a few lines above that, did capital contributions of $4.4 million related to the harbor reconstruction project. So once again, the revenue is recognized in enterprise funds that are on the full accrual method, so just like a business. So when you build something, it's capitalized and goes to the balance sheet, so those expenses come off and go to the balance sheet and they're depreciated over the next 30 years. So that's why there's such a large increase in net income in the current year, because you got $4.3 million worth of capital grants to work on the dock rebuild, or the harbor rebuild, and those costs were capitalized and put on the balance sheet. SMIC had a loss of $1.6 million. That's $150,000 lower than the prior year. Healthcare facilities had an increase of $5.8 million, which is $900,000 lower than the prior year. And your non-major funds had a loss of $673,000, which is a $2.4 million decrease from the prior year. Overall, across all your funds, because once again, buoyed by the increase in harbor and healthcare facilities, total change in net position, net income, nearly $7 million, which is $1 million better than the prior year. So, once again, if you look at it just on the surface, it looks great, but once again, so it's slightly misleading, because once again, harbor has an increase of 4.3, and that's because all those costs went to the balance sheet and they'll be depreciated over 30 years. And then healthcare facilities is, most of that activity is from Providence, just Providence money. So questions on that before we move, and then the next two pages are just the cash flows for your enterprise funds. And I know I know I'm throwing a lot at you, and I know you guys are just seeing this financial statements. I would say that, I'm available by phone or email at any point in time. So if you, as you read through them, or if you have any constituents that have questions, I'm happy to answer those questions at any point in time. I know we show up and do the audit for 2 weeks, and I come here for an hour and do a presentation, but we work for you year-round and available for questions. I'm sorry.
Well, asking questions is dangerous because I'm so naive, but.
Hey, that's the whole point of this. I think we have a whole another 53 minutes. I can answer any question you want. I can dodge them all too, right?
Why healthcare facilities has $18 million unrestricted? I think that was explained at one point.
Well, net position, right, there's three classifications. So on page 25, right, there's net investment of capital assets, which is capital assets, buildings and equipment, minus any debt to acquire them. And so essentially you've got a negative, meaning you've got more debt. You've used more debt to acquire the assets than you have assets. So it's a negative 300. And then the classifications are net investment, restricted. And so restricted would be, net position net income per se that's fallen to the bottom line that's restricted by an outside source. So in the case of, the CPV, it's restricted by the state of Alaska for a very specific use, right? You can't go, can't pay salaries with it, for just anyone, right? It has to be related to commercial passenger vessel. And so then the plug or the difference goes to unrestricted. So the fund financial statements for governmental activities are different than the financial statements for business type activities or enterprise funds, proprietary funds. So there's just, and once again, it comes down to financial reporting. The council, or management can set aside in unrestricted. You can, in the fund financial statements, you have committed, which is set aside by the city council, the highest level of authority. You can commit funds, and so if you commit them, you make a formal action. We report that in the financial statements, and to decommit them, and take the same formal action, just the reverse, or you can assign them. But that, again, for financial statement reporting, that they don't have the same classifications of business type activities. So there's just the three options, and if it's not invested in capital assets or restricted, it's unassigned. So it doesn't mean it's available to be spent at your whim. There could be some underlying, commitments that, the council is placed on them, or probably the board is placed on them, but for financial reporting purposes, it has to be unrestricted.
Okay.
Because once again, a restriction, again, for financial statement purposes, is from an outside source, not an internal source such as the city council. Good question. So after page 28, so starting on page 29 is the footnotes. It goes from 29 to 66. Essentially just additional information that supplements the financial statements themselves. It gives you a breakdown of your investments, your cash investments versus restricted cash investments. Breaks down accounts receivable. For your investments, we break them out by risk category and how they're measured. There's a receivable footnote, capital assets. If there's any of them you specifically want to cover, I'm happy to talk about any specific footnote. But it just gives you a little bit more detail than some of the numbers we've already talked about. And then there's about 15 pages of disclosures related to the PERS plan and your associated liability and assets with that. Under the third solid tab, required supplementary information, is a budget to actual schedule for the general fund. So for your major funds that adopt a budget, which the general fund obviously does, we're required to show an original and final budget, and then an actual, and then the variance. So overall, as you can see, total revenues came in $1.9 million above budget, with the biggest increase, over budget, is in taxes of $1.6 million. And then your expenditures, same thing. You budgeted $17.1 million of expenditures. Actual expenditures were $14.8, so you beat the budget by $2.3 million. Transfers out exceeded the budget by $1.2 million, so you budgeted a increase in fund balance, or I'm sorry, you budgeted a loss of $2.5 million, and you actually had an increase of $600,000, so a 3.1 positive variance in change in fund balance. The next few pages are just required information about the PERS plan contributions. I don't want to bore you with those. Unless you have very specific questions, I'm happy to answer those. Next tab back, under additional supplementary, this is the general fund budget, final budget actual, but in much more detail. So under taxes, the schedule we just looked at, it was a rolled up tax number. Here you can see that the sales tax was the primary driver of coming in over budget, while payment of taxes and property taxes were under budget. But it just gives you a lot more detail on revenues and then expenses by function, general government, public safety, public works, things like that, and object code, salaries, supplies, equipment, things like that. And then on page 82 is the budget, the balance sheet, for your special revenue funds and capital projects individually that combined form the other governmental funds column in the balance sheet and the fund schedules. A few funds of note. Capital Acquisition Fund has a ending fund balance of $2 million. Animal Shelter has an unassigned deficit of $786,000, but across all your special revenue funds, capital project funds, an ending fund balance of $2.3 million. And then starting on page 84 is the P&L for each of your individual funds. Again, very far right-hand column of page 84, Capital Acquisition Fund. You had increase of $1.4 million. 750 of that came from transfers in, and then 663 of sale of capital assets, and that's an outstanding fund balance of $2 million. Animal Shelter, same thing, decrease of $1.5 million, and that's how you get the ending fund deficit of $786,000. So, Mr. Barlow, kind of back to your question, are you using your money correctly? That's why it's tough, because obviously you guys were saving money, because at the beginning of the year you had $770,000, spent $1.5 on the animal shelter, and now you've got a loss of, or an ending fund balance of $786. So, I'm guessing in '23 a transfer has been budgeted to cover that deficit and probably more, but that's something we'll look at. But. So it all just comes down to how you guys want to spend it, right? So overall, change in fund balance across all your other governmental funds of a loss of $285,000. Page 86, the balance sheet of your non-major enterprise funds, once again, water, wastewater, and parking. I'm sorry, I misspoke earlier when I named the three of them. Unrestricted net position in water of $3.96 million, wastewater of $3.9 million, and parking of $1.275. So unrestricted in total across the three of them, 9.15. Next page, the profit loss for those three enterprise funds. Water had a loss of $95,000, which is $900,000 lower, or worse than the prior year. Wastewater had a decrease of $205,000, which is $870,000 worse than the prior year. And parking lost $374,000, which is $166,000 lower than the prior year as well. So overall, decrease in net income of 2.45 from the prior year across those three. And then after that is the balance sheet of P&L for your internal service funds, the motor pool, and the compensated annual leave fund. And behind that is the statistical section. It's again one of the requirements of the Certificate of Excellence is you have to, management has to put together a statistical table that shows essentially 10 years of data across multiple things, balance sheet, P&L, lots of different stats in there, debt, things like that. So if there's any questions, I can answer those, or Susan might be able to answer those. Once again, that was a ton of information. I just covered, 115-page document, 35 minutes. So happy to answer any questions on that before we move on, or if you want me to give you 5 minutes to digest them, I can circle back to as well.
The 5 minutes wouldn't be enough, I think.
That's true, which is probably true.
Yeah.
But same thing, I work for you guys year round, so, as you look through this, I know that you just got the paper copies today, and there's a lot of information in there.
Yeah,
As I said,
it's going to take a while to digest.
For sure, for sure. Okay. Well, there's no questions, we can cover the compliance reports real quick. Once again, I guess one thing to talk about, last year we made the decision to pull this out. In prior years, if you look at your ACFRs or on your website or on the Federal Audit Clearinghouse, the compliance reports are in your ACFR. Last year, due to the holdup from Providence, Providence is receiving provider relief funds essentially with your name on them. And since KPMG does the audit of the hospital, we wanted them to do the compliance audit. And they were slow to get around to the compliance audit. We were worried you were going to miss the 9-month deadline for issuing, we didn't want to hold up your ACFR submittal. Technically, if your ACFR is due within 6 months of year end, for the Certificate of Excellence. It's due to the federal government within 9 months. So KPMG was kind of holding us up, and Providence was holding us up getting the information. So we pulled this out last year. One thing I've talked about before in this meeting, and I just talked to Suli about, is working with Providence to get us the information. So once again, after KPMG's audit is completed, they provide us the financial statements, and we take that information and consolidate it into your financial statements. But then the next step is getting additional information from Providence. And the last couple of years, well, every year that we've done it, but the last 2 years in particular, since they lost their CFO here, I think Cole was here, I don't remember his last name, but he was here, and he was responsive at least since he's left. Now, I send emails into the abyss, and I think to Seattle, and it's hard to get information. So part of your financial statements this year were held up by a couple months, just attempting to get information from Providence that essentially never came, so we just did our best and moved on, because it wasn't fair to management or to you guys to withhold financial statements while we waited. So talking to Suli, it sounds like there's someone locally has been hired at Providence, and Suli is going to work to get the needed, there's some needed information throughout the year. Essentially, you're giving Providence, you're making transfers to them. They're holding that money for capital equipment purchases. So what we need to know for the audit is what they're doing with that money, like what are they purchasing, and then once the audit comes out, there's some additional information that I'm hoping that moving forward, since there's someone local, that they'll be able to provide that information. So again, unfortunately, I don't mean a whole lot to someone in Seattle at Providence. So if that relationship gets better, your financial statements might come quicker. Anyway, so the compliance report, we just decided once again, so it's already separated, we'd leave it separate. If you guys want to change that in the future, it makes no difference to us. It's pretty easy to put back. But once again, this talks about our single audit being the federal and state compliance audits. We'll give an opinion over, there's a report in here on your internal controls or testing of internal controls over financial reporting. Once again, it talks about one finding, the finding of utility billings. We have our report over internal control or federal compliance. So during our compliance audit, once again, we're looking at two different things. We're testing your compliance with specific grant requirements, and they're also looking at internal controls over the individual programs. So again, no findings over federal compliance. Page 7 is the schedule of expenditures of federal awards. Essentially lists out all the federal money that you received or expended during fiscal year 22. In total, you spent $6 million. The bulk of that, almost half of that, $2.9 million, was the Seward North Harbor boat launch, and $855,000 on the Lowell Point Road, and then the health center cluster, essentially the money you were a co-applicant with the community health center of $1.9 million, plus the provider relief funds that the hospital expended. So it's in total $6 million of money. Page 9 is just a quick summary. As I said, unmodified opinions over the financial statements and federal compliance. Then on page 10, detail is a little more detail of our finding. Like I said, during our testing, we noted 5 instances of charges not being billed with the customer as a result of net meter readings. We also learned that there was a population of 30 net meter customers who were not building it or being billed at various times. 2 instances of charges for lights not being updated from a previous amount. 1 instance of an industrial client being charged incorrectly by ERUs for sewer. 1 instance in which a customer was categorized as the incorrect type of entity. 1 instance in which the customer was charged duplicate amounts. And 1 instance of a base rate being charged with no additional charge or usage as required by tariff. So a multitude of issues, but once again, this isn't news to I don't think anyone that's sitting here. So, but again, you guys are working on it. So once again, we'll see how the testing shakes out during the next audit. And then the hope is, even if there's a finding next year, the hope will be gone, or the hope will be gone. The hope is it's gone in 2024. And then, just real quickly on page 15 is the state schedule of financial statement, or state schedule of financial assistance just lists out all the state money expended during the year, a total of $1.96 million. So And then the very last thing, real quick, letter to the governing board, required communication. Talks about our audit. One thing to point out, on the top of page 3 is the correct or uncorrected misstatements, and this breaks out the 4 journal entries that we posted as a result of our audit procedures. But once again, nothing, similar entries what we posted before, and nothing that would rise to the level of a material weakness or a significant deficiency where we think that, management doesn't have an internal control to know that a balance is misstated. It's just, something slipped through the cracks. We posted journal entry to properly state those account balances. So overall, like I said, it's an improvement, 4th year, you're definitely working in the right direction. I know that it's costing you money to get to that point with your accounting assistants, but like I said, it's saving you fees on the audit, the additional fees, and we're definitely seeing an improvement on how the audit goes. We've been here first couple of years for 2 weeks, and left with a huge pending list. The audit drags on. This year we cut it down to 1 week, and we've got a pretty big team here. We cut it down to 1 week in Seward, and then completed the rest of the audit in our office. So it's getting better, and like I said, I appreciate Suli and her team's willingness to get ready and then get the information to us, any pending items getting to us. So overall, the audit is getting smoother, quicker, so I appreciate it.
Questions? It's an ongoing concern of mine that we keep being told that our utility billing system is so complex and more complex than anyone's, and I always ponder how it got that way and what can we do. It shouldn't be too hard to revise it, but obviously it is, so I don't know, that's got to be something that's fixable. And other than just hiring outside firms to do the billing, that's not a fix.
Well, and I would agree with you, because if it's complex for you guys, it's going to be complex for them. And just because you outsource it doesn't change it. But the first time we really looked at it, unfortunately the first year we did it, it was COVID, so we weren't here. And trying to wrap our head around it over the phone was very tough. So we knew there was problems, and we truly probably didn't look at it as hard as we could because we weren't here, and the city was a little short-staffed, and there was people coming and going. So it was year 2 when we came, and I remember sitting down. I forget the gentleman's name, the bald-headed guy, in Sarka, and we sat down, and I had a staff member, and they were just like blown away how complex it was. You had to keep going. Jeremy, they kept going. I have to go back and like explain this again, and I don't know. We audit a number of cities that. Not everyone has a utility, right?
Oh, that's the thing.
For example, City of Kodiak, they have KEA, which is a standalone business that has nothing to do with the city. So it's easier, right? Some City of Valdez, they have Golden Valley Electric, they are Gold Valley, so it's unrelated. So a lot of our cities don't have this, an internal, where you're selling electricity. But yes, the complexities, and I can't answer why, but yeah, it's very tough. Set up poorly, and just over time, and I'm not blaming anyone. But yes, it's overly complex, and just because you outsource it doesn't mean that it's changed. So, and all that means is you're probably overpaying to have it managed by someone else, would be my guess. And once again, I can't make management decisions. I can just give you I just know it's overly complex, and we audited a number of cities similar to you guys.
And you did just say it was set up poorly?
Oh,
No, I just want to make sure I heard you well, because that's what I thought.
that would be my
He said that.
guess, like
Yeah.
overly, and by that, overly complex, and I would also say it was set up poorly because, and that's just, even if and I'm not gonna say I know it inside and out, I know some basics, and we have lots of notes written about it in all the documents, but just reading it's overly complex. And it's so complex that I think it'd be hard to set it up correctly and make sure that every customer, when you've got, I think, I was helping write the RFP for your forensic audit, we were just running, I think it's 3,600 customers you have, or 3,300. So but it's that complex to make sure you have every one of those, and sure, they're not all set up at once, but 2,500 of them were probably set up at once. And so to make sure that you have those all correct, something slipped through the cracks would be my guess. And then, in some of these, these, I don't know anything about Mama Love, but Highliner, I know we've looked at it 4 years in a row, and this year it was fixed. It took 4 years to fix it. Icicle, I know we hit heavily on it last year because they were saving a substantial amount of money, and so we looked at it, and it's, it's still not 100% fixed. So that would just, speak to me that it's so complex, or there's so many problems, or so many, where do you start kind of deal. So that would once again just lend itself to complexity, and once again, I would just assume, and I don't want to throw anyone under the bus, but on the downside, it's being recorded, so I guess I'd probably throw someone under the bus. Yes, I would say it was probably set up incorrectly at some point in time.
Thank you.
Okay. Wow.
Just to be clear, the Icicle is not, it should be metered, but at this point, it's just a flat rate for the water.
Well, so once again, grain of salt, so as of 12/31/23 is what we audited, so we could have looked at a transaction from 12/31/22, so we could have looked at a transaction from January of 2022, so a long time ago.
They don't know if it's been fixed.
So I couldn't give you a
It
true
has?
answer, but Icicle was being charged 6 ERUs for sewer instead of being metered. And it says the tariff specifies that industrial is to be charged metered services. And it also says they are not being charged a base water rate. So whenever we test this, and same thing, I can tell you specifically the date we tested this if you want. I can grab my computer and pull it up in between this meeting and the next and tell you, but as of this point in time that we tested it, it had not been corrected. Once again, grain of salt, we did the testing in March. We don't go look and see if it's corrected as of March of 2023. We just say as of the date of the bill that we're looking at, it was not correct. And then once again, we report it to you and it's,
But we can easily find out.
So that can come out next year too, so.
If it's not.
Yep.
'Cause
So
we
yeah,
do
we'll
this
probably
every
look
year.
at the 4 that are, well, I know for sure we'll look at 4.
I feel like it's
we'll test
Groundhog
40 and we'll
Day,
look at the
yeah.
4 that weren't corrected.
Yeah.
So.
Okay. Other questions? We're going to hear most of this again in a 10-minute shot tonight.
Yeah,
right?
so that's what I was gonna say. What would you like me to focus on there, McClure, during the next presentation?
No, maybe just the overall,
Okay.
because I don't think the listening audience wants every single number. and
Oh,
really
for
get
sure,
to
yeah,
the
I can definitely
minutes.
sure. And because I know it's
So-
hard just to listen, and then we're
Right.
talking about some
They
big
just
numbers
kind
here.
of
Yeah, no,
like we
I'm sure
do.
I'll bore every one of them, so I'll apologize in advance, and then I can touch on the finding, but, okay,
Yeah.
yeah, I can give you the
Just like the bottom
the
line.
5-minute
that
version or 10-minute version.
Leading up to, so a bit of the detail of what you had to do to get here.
Sure, yeah, I'll
So
start
people
heavily with
know.
that, because, the audit approach is, I think the most important thing, right? The testing of the control sets our audit is risk-based, and so we do our testing, and if there are problems, it greatly expands our audit
Right.
approach. So if we're able to rely on your controls, it saves us time, it saves, management hassle, pulling more transactions, things like that.
There, I think I'm getting something specific now. Is there anything specific rest of council would like to hear in that 10-minute shot
Oh,
tonight? I mean,
well, maybe, I just have a question, but maybe that would be
Councilmember
something to
oh,
talk about.
go ahead.
Is we contract Carmen Jackson, but now we have hired Sully. And my understanding is we'll back away from Carmen Jackson. Is the intent to go 100% without Carmen, or we're going to keep them in some?
No, we have to keep them. They are not only working as a finance director now, obviously, but they do a lot of billing and other areas too, on the finance department. Yes.
So we're going to back away from them to some extent, but still have them back up.
Not in the near future. I don't see it in the near future. And they have been working, I've been working with them hand to hand with the billing system as well. So we have the outsourcing and also the working.
And I will say that we did see, I think Carmen's team came in at the 12/31/21 audit, and that was the smoothest of 3. And you had a gentleman named MC who works for Carmen, who had, essentially, when we did the 22 audit, this spring, had been here essentially a year, worked with you for a year, and that was by far the cleanest it had been.
Yeah, I think so.
Unfortunately, MC has moved on from Carmen's team. But once again, that's kind of, and once again, I can't dictate what you guys do, but just, once again, real world experience. I know, once again, I know it's expensive, but it's, it greatly helps us, and once again, you know, it's cut down your additional fees on the audit. Once again, if we show up and we have to post, 20 plus entries, that would be outside of the scope of the audit engagement. And we're just paying our billable hourly rate to, do that kind of stuff. So.
Sorry, just to drill down on that a little bit, Suli, I'm sorry. I think we're advertising to hire an assistant director?
Yes, deputy.
I'm sorry, deputy.
Yes.
Do we need a deputy if we have Carmen Jackson and Suli? Considering that we haven't even had a director or a deputy director. Well, you are deputy director, sorry.
We need deputy director because I will say the majority of what I'm doing right now is with the billing.
So that she can focus on the bigger picture things and that billing can be honed in on.
Billing is, as of right now, is the majority of what I really do.
And that's water and sewer.
That's electric water, sewer, all of the billing.
Other questions? Well, thank you.
Well, thank you. Once again, I appreciate you guys having us back. Once again, you have the choice of audit firms, so I appreciate you having us back. We're a local firm, so I
And
appreciate it.
since this is a work session, I should ask if there's any public input that is public that wants to ask questions. We have a public here.
My curiosity is, do we have a clue as to why the sales tax is so much higher? I wonder if it's related to online sales.
Oh. We could investigate that.
Yeah.
They started collecting.
As I said on the budget actual for the general fund, your budget, your actual came in higher than budget, I think by 1.6.
Yeah, it could be for the sales online.
Collecting online sales and
And you.
increase in inflation over the past, if prices increase, taxes increase as well.
Yes.
So combination, but we can look into the amount of online sales tax we received.
Yeah,
So
that-
the reason it's important is I don't know how you fix this moving forward, but everybody with a 99664 zip code is being charged 7% online.
And we
Well,
get the revenue.
Yeah, and a lot of those people don't live
Yeah.
in a 7% district. So there, we have a little bit of a taxation without representation going on here that I think is important to recognize.
Yeah, that'd be an interesting one to try to fix.
I think the only way
Because
to
if you
fix
get
it,
your
as I
mail,
understand, is all the outlying regions would have to get their own zip codes.
Right, that's
In
it.
order to fix that. There is something else I think that could happen. Because again, if you have approximately 50% of your ratepayers are also in that same area, right, outside city limits. And I know this is like, we're talking charter changes or something, but it does sort of lead one to the notion that some way of giving those people a voice in the happenings, not necessarily a vote, maybe it's an advisory seat on council, maybe it's an advisory vote when you vote, I don't know, but I just have to bring it up and throw it out there for people to think about.
Thank you, Linda. Yeah, that's
It's my
definitely
job.
something to consider. Anything else? Well, thank you, and we'll see you in just a bit. I'll adjourn the work session, and we will meet at 7 o'clock for the regular meeting.
Yeah.
And